Cathie Wood has just purchased $10 million worth of Tesla shares in her ARK funds. Now, ARK Invest gets flack from time to time when they decide to sell Tesla shares while simultaneously shilling these outlandish Tesla price targets. Now, folks, I'm a huge Tesla bull myself, and although ARK usually has to sell shares because Tesla is exceeding the 10% position size limit, I understand how it's not the best look and gives cannon fodder to the naysayers. But Cathie Wood's ARK Invest has just scooped up about 15,858 shares, worth about $10 million, as the stock has been crashing and underperformed the broad market. We're going to talk about this and some of my thoughts on the EV market and what's going on in China and in general. So Tesla's down a whopping 47% year to date, which despite headlines, I think has nothing to do with Tesla and the Shanghai lockdowns and things like that, and everything to do with the macro and growth stocks. We're always going to fall harder and faster than the index in the event of a market downturn, or the mother of all downturns, as it sometimes feels like we're currently watching unfold in front of us. Now, it's hard to believe, but as a week ago, that $13 trillion of global wealth has been eradicated in this bear market. So for some perspective, during the great financial crisis of 2008, 2009, roughly $17 trillion of wealth was erased. Now, this number is from a week ago, and it's probably even much larger now. So this is pretty insane stuff we're watching unfold here. So this ARK Invest purchase is actually their first time buying Tesla since February, and after months where ARK was actually selling Tesla, which in hindsight was a good move, although the rest of their holdings are down too, I'm sure. Now, ARK Invest owns Tesla in 3 of 6 of its actively managed funds. They have the ARK Flagship Innovation Fund, ARK-K, ARK-Q, the Autonomous Technology and Robotics ETF, and the ARK Next Generation Internet ETF, ARK-W. They have Tesla shares in each of those. And before last Thursday's trade is when this happened. The 3 ETFs held about 1.27 million shares of Tesla worth $846 billion. Meanwhile, longtime Tesla bull Dan Ives, an analyst at Wedbush, has lowered his price target for Tesla to $1,000 from $1,400, citing the issues in China. Now, these analyst price targets crack me up. I mean, when stocks are booming, they increase them. When stocks go down, they lower their price targets. I mean, this practice is about as useless as a poopy flavored lollipop. He cites issues in China, which I believe are nothing more than an irrelevant short-term blip on the radar, pertaining to the Shanghai lockdowns that will hurt Tesla's production this quarter. It's not going to matter when we look back on this in 5 years, though. The factory is basically already back to full capacity, and these production issues will be nothing more than a hiccup for the long-term trajectory of Tesla. Now, in 2022, we've largely witnessed an implosion of the EV industry. EV startups have gone public to rise and fall, in some cases losing anywhere between 80 to 90% of their value. I mean, if we look at a stock like Rivian, since its IPO, it is down 80%. From its peak, NIO is down 76%. That's another EV holding I have. So Tesla's my largest position. I have a very small position in NIO as well, which I'm down quite a bit on. Lordstown Motors, another General Motors Wonder investment, down 93% from its peaks. Things are ugly out there. And, Tesla, of course, is down about 47%. Now, this is all happening while some have voiced concerns that in China specifically, an oversupply is actually mounting of electric vehicles as the country has too many electric vehicle firms, some believe. There are some 200-odd EV startups that have launched in China, which is absolutely insane to think about, in the pursuit of this favorable governmental treatment and all the subsidies that they're handing out. So it hasn't been quite as extreme here in America, but we do have several of our own. Now, China's EV market would appear saturated, even though the demand is expected to rise to the ring of 5 million cars this year. Most of these 200 companies will fail. There's too much investment chasing too little demand and too many companies with too little profit. Now, over the past couple of years, we've seen many of these EV startups globally head to these lofty valuations when the cost of capital is cheap and rates were low, but their market caps have since crumbled. Add to this list the rising production costs and surging prices on key raw materials like we're seeing with lithium, cobalt, and nickel, and companies must raise car prices to offset the costs, which is not helping. It appears all but certain that many of these companies will not survive. Many have not even gone to the mass scaling phase, which is what nearly bankrupted even Tesla. Many companies are already raising alarm bells that they may cease to exist. Lordstown Motors, once said to be the Tesla killer, and one of a string of brilliant investments by General Motors that also included Nikola Motors, I can't, has it said its ability to survive will depend on raising more capital. This is going to be tremendously difficult and increasingly hard in the environment we are heading into. It seems the pain for many of these companies is only truly beginning as it becomes an ever increasingly competitive market with these dire supply constraints, supply chain issues, as well as the shortage on these natural resources that are required for the batteries. And there's going to be limited capital available for investment. It's not going to look like the last couple of years when everything was booming and people were, just dying to throw money at anything. Some of these companies will survive, many will not, but I remain ever as confident in Tesla. As a matter of fact, I put some more money into it today, buying at about $630 a share. And Tesla's my number one holding. Tesla has not been spared this year, though, and has crashed a lot. But nearing $600, it's starting to feel more cheaply valued, all things considered. And while no one can predict the exact bottom, it does feel like we're getting closer. Meanwhile, for the many who say Tesla's demand will dry up, as they're priced like a luxury automaker, the cost of their cars are too expensive. Well, if they're any indication, California sales in 2022, demand for Tesla is up 83% this year, in stark contrast to all the other brands that you could see on the screen whose demand is simply cratering. And if we zoom out to the broader US market here, guess who has the top 3 selling electric vehicles in the US? Tesla, Tesla, Tesla. The Model Y with 52,000 sold so far. The Model 3 with 47,000 sold. Model S with around 9,000, far outpacing the competition. Ford comes in 4th place with the Mustang Mach-E with just under 7,000 sold. Tesla's dominance of this market, I don't think, is going anywhere for at least a few years, and by that point, it could very well be too late for the competition to take any meaningful amount of market share. Add to the list Tesla's phenomenal full self-driving. It just keeps getting better. I really encourage you to check out videos. You can just type it in on YouTube, Tesla FSD Beta. It's incredible. This company keeps getting better and better, and they just announced that they're going to be doing a battery and an electric vehicle factory in Indonesia. This company is firing on all cylinders, and while, in the short term, the stock is going to keep getting beat up for as long as we're in this downturn, so growth stocks are going to suffer, but I think that when we come out of this, Tesla will come out of it in the strongest position. I think they're already in the strongest position, but they will only they only stand to benefit, while many of the legacy auto companies, I think, are going to be hurting. So I think Tesla is firing on all cylinders here. If you enjoyed this video, please don't forget to like and subscribe. You can follow me on Twitter at InvestWithVinny, and let me know your thoughts in the comments below. I'll see you guys next time.